Talk About It Tuesday. And today's question is kind of a generational question. I love it because you'll see how each generation views the world and how it's impacting the way we make decisions in regards to investing. So listen to this. Is it worth it to buy actual gold and silver rather than just invest when inflation is going up? All right, so let's just make sure we're all on the same page. We are all experiencing massive inflation right now, right? And so historically, when we've seen inflation, we've seen a rush for people to pull their money out of cash and put it into gold as a hedge against inflation, as a store of wealth. The reasoning being they want to preserve their spending power, and they believe that if they leave it in the cash, which is true, they'll diminish their spending power as it sits there. But if they put it in gold, and gold tends to go up in inflationary times, not because of inflation, but because there's a huge demand, and the price of gold and silver is solely driven by the demand. And so if massive people pull out of cash and drive towards gold and silver, then you'll see the price of gold and silver go up in inflationary times. So that has been what has happened historically. But what are we seeing right now? We're not seeing that trend play out for the first time in my lifetime. We're not seeing that trend play out. And it's interesting that there's not this mad rush to gold and silver, but I think I have an explanation as to why. So I'm going to give you a little history lesson, just kind of bear with me. So prior to 1933, really 1934, the U.S. was on a gold standard, meaning money was attached to gold, right? You had a note, and you could actually cash it in for its equivalent in gold. So in 1933, December 33, so really 1934, the U.S. left the gold standard. But you have to understand, I'm a Gen Xer. So any Gen Xer, baby boomer, or prior, our grandparents were adults when the U.S. was still on a gold standard, and they took them off the gold standard. So they believed that the piece of paper wasn't the value. It only represented the value, which was gold, which was a rock. And so when we went off the gold standard, when my parents were born, shortly after they took us off the gold standard, they would drill that paper doesn't really have the value. It's gold that has the value, yet only the government can own gold. And so they grew up, my parents grew up with the piece of paper. And when I was born, again, I'm a Gen Xer, we were taught to save the piece of paper. In 1975, it was Americans were allowed to freely own gold again. So grandparents still around, parents remember what they would drill, that gold is the real value. And so, especially in the 70s when we saw massive inflation, you started seeing people say, oh, I'm going to get gold because that's the real value. And that attitude held strong even into my early adult, even mid-adult years, right? I'm middle age. And even up until a couple of years ago, I would hear people say the only real money is gold, 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 as if the rock somehow had more value than the paper. But you got to understand how wealth was derived or understood at that time. We lived in a much more material world where wealth was calculated in material possessions. And so a rock was seen to be more tangible. They said you have to have tangible assets, more tangible than the piece of paper. And so in the material world, it's like, okay, if we can have something more tangible, what's more tangible than paper? A rock, right? And it's a perception. And it wasn't until my mid to late 20s where people really started using credit cards a lot. So now on a bank card or a credit card, all that which was stored in a massive amount of paper or rocks was now in one little piece of plastic. And that piece of plastic even extended into the future because you could buy into the future for money you didn't even have at the time. And so we started seeing this transition, yet gold was still seen as the store of wealth. And so people would put their money in tough times still back in that rock. Now, fast forward, my children don't see the value in the piece of paper, don't see the value in the rock, don't even see the value in the plastic. I try to give my kids are all adults now, but I try to give them money, and they're like, Dad, well, why would you give us that piece of paper? What are we going to do with that? Can you Cash App, or can you Zelle? Can you send it to me electronically? They live in a much more digital world, a world that's not as material, but they understand that transactions are done in cyberspace. And so this new generation, I think what we're seeing is a generational shift where young people don't see the value in taking and having pieces of paper or having a rock. And so when we saw these economic shifts happening recently, we saw the meme investors, we saw the Robinhood investors, we saw the crypto investors, we saw the Forexes, we saw all these young people who are not trying to store wealth, but are trying to make transactions that happen at the speed of light, make money really fast, and they're not even considering, storing and preserving. They're thinking about growing and making things happen at the speed of light. And so I think we're just in this transitory period where we're moving away from, generationally and culturally, that materialism that store wealth in material things, and that wealth is created in the cyber world. And so I think we're going to see less and less of that, in inflationary periods, the run towards a rock. So the other part of the question is, should you, and I'm not making any suggestions as to what you should do. I don't give investment advice. I just want to give you a different perspective on things so you can make your own decision. Part of the question was, should we do gold? But we're seeing gold and silver not really on an upward trend the way it would normally be in inflationary times. And what we are seeing, though, is the stock market is still on an upward trend, still breaking records. We're still seeing the real estate market still on an upward trend, breaking records, which tells us one thing about this inflation as well. Business owners, real estate investors see the inflation as transitory, meaning that it is based upon supply and labor issues that should be resolved within the next several months, meaning after those issues are resolved, then prices should start to come down. And so those inflationary, pressures that are driving the prices up will be gone. And so you're still seeing, businesses making profits. You're still seeing, again, investors, making profits, and home prices still going up. You're still seeing new building and things like that. So this couple of things happening all at once. I think we're seeing cultural shifts, generational shifts, but we're also seeing that people aren't fearing the inflation because it was really a result of the pandemic, which caused labor and supply issues that should be resolved shortly. So I think, those are some things that you should consider when you're deciding what to do about this inflation and how to preserve your money best. Right now, the trends, stock market, real estate, those things are still doing well, where, some of the traditional things like gold and silver just aren't doing what they used to do. So I love the question. Keep the questions coming. Comment, share, subscribe, and keep the questions coming. I'll see you next Tuesday.